Hello, 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 everyone. Welcome in. Happy Tuesday. If it's Tuesday, it's got to be Tuesdays of Tonya. I know, Rodney. Yes. Happy to be here. Happy to be here with you guys tonight. We are going to jump into a topic that's been a part of conversations and questions that I've had repeatedly over the last couple of weeks. So I said, oh, what better thing? Oh, yeah, that's right. If you are here and ready to receive the wealth and abundance that's made for you, go ahead and type in the chat. Wealth is my birthright. Make sure you have the energy flowing, the mindset flowing, that you are ready to receive the wealth that is designed for you. Absolutely. Yes, Sean, that's Latoya. The wealth is coming your way. And so I'm going to share my screen because this, again, has been a hot topic for many people, and I'm going to jump right into it. Let's see. Get a glimpse of my 10,000 screens I have open. Hold on one second. All right. Move this over. Go in presentation mode. So the difference between ETFs and direct crypto purchases. People have been asking, which one should I do? Which one should I do? Which one should I do? And so here we are. This training is to give you the information, the impetus that you need to be able to make an informed decision when it comes to, do I purchase a direct crypto or do I get the ETF for that crypto? So I want you to be able to know the difference before you invest in either. All right. I'm on fire. This machine needs to catch up with me. So, should I buy Bitcoin directly? That's the question. Or should I invest in a Bitcoin ETF? There are a ton of ETFs that will be coming on board based on regulations that are being put in place to make it easier for different cryptocurrencies to become an ETF. And so, again, this topic has been all over the place. And so I want to make sure you guys completely understand what an ETF is and when and if you want to add it to your portfolio. And let me see. Latoya, do you got me on the host controls? Okay, hold on. Let me add you. Let me see. Now they do something special where they say, are you sure? Give me a second.
I got them. Yeah.
Okay. It asks you now, are you sure? Like, yeah, I said it. That's what I want. And that was hiding behind the other screen last week. That's why I was like, what's going on? All right. So these ETFs, what is an ETF? Let me get my presentation back up here properly. So an ETF is an exchange traded fund. You want to think of it like a basket that holds one or more of your assets. It trades on the stock market and it's just like any other stock. You can buy it or you can sell it through a brokerage account. There are currently Bitcoin ETFs, there are Ethereum ETFs, there are even baskets that you can get that have multiple cryptocurrencies in that one basket. And as I said, there will be a ton of additional ETFs getting approved here in the near future based on regulations that are being put in place as we speak to allow them to roll out. So I want you to be very informed what you're getting when you get an ETF. So when you have an ETF, again, you are buying it via your stockbroker. It's going to be on the stock exchange. Separately, when you're buying crypto, you're buying that actual asset. You're buying your Bitcoin, you're buying your Ethereum. When you think of the difference, think about Nike. When you go to the store, you can buy a pair of Nikes. When you want to buy stock in Nikes, you go to a stockbroker to buy stock in the company, the Nike stock. So that's the difference. Do you want to have that physical asset, that cryptocurrency, or do you want to have the stock in it. When my grandson was very young and his father kept buying him Nikes for this little baby whose feet kept growing every 6 weeks, I was like, you better get him some stock. Get them the stock, and then you can go spend your extra money on these little Nikes. It's ridiculous, right? So you can have both. And so when you have your own cryptocurrency, it's your asset. You're able to store it in your wallet, either a hot wallet or a cold wallet. If you have it in a cold wallet, you are able to control the private keys, again, giving you more control of that crypto. We talked about that last week. If it is with, say, Coinbase or another, or Cash App, another platform where you have to do a KYC, give them your name, your information, and they give you a username and password, you still have to make sure that that company is around, nothing happens to them, so that you can access their website to get access to your cryptocurrency. When it's in cold storage, it's offline on your device, and you are able to access that using your secret key. And then uh, when you have it in a DeFi platform, you have your private key that you're able to access that on any platform, any DeFi network. Okay. So when you own your crypto, you can send it to someone, you can stake it somewhere, you can trade it, you can use it to buy anything that you want if someone will accept crypto as a form of payment. But if you are putting it in your portfolio as an ETF, you cannot do that. So with your Nikes, if you want to give them to somebody, you don't like them anymore, fine, they're theirs. That stock that you have in the Nike company, it's in your portfolio with the stockbroker. So there's a big difference in the two. And again, you may want to have both. All right, so here are some factors to consider when you're looking at, and screenshot this if you want to have it for the future. Ownership. With an ETF, it's an indirect ownership via a broker. With crypto, Okay. With crypto, you directly own the crypto. With an ETF, the custody, it's held by a fund custodian. With custody with crypto, you own it in the wallet that you have. The trading hours within ETF, it is based on the stock market's hours, whatever stock market you're using. If it's a US based stock market or a different country in China or Australia, whatever their hours are, those are the hours that you can access that crypto or that ETF to buy it, to sell it, to trade it, only available during their working business hours. With the direct ownership of crypto, you have access to it 24 hours, 24/7. You can do whatever you want, buy, sell, trade, get more of it, sell it, whatever you want, right? Give it to a cousin. The utility for an ETF, you can't use it. It is there to be a part of your portfolio, and it goes with the ebbs and flows of the stock market. That's it. You can't spend it. You can't use it. You can't send it to someone that you say you want to buy a new car. You can't send your Ethereum ETF to them. But if you own that Ethereum or that Bitcoin, you have full use of it. So you are able to send it to someone. You're able to buy things. It has utility. The taxes on each, it's the same thing, but the taxes on each is different based on where it's set up. So if it's in an ETF, it's going to be treated like a stock. However, your stocks are taxed with that brokerage, your ETF will be under that same tax requirement. With a direct crypto, again, it depends on the platform. So if you are on a centralized platform in the US with a non-US crypto at this point, and you have a profit of 600 at this point, we're going to say the date and the time. This is September 23rd, 2025, because you know these rules be changing, right? Or anybody come back and say, you said if you have a gain of more than 600 and you withdraw that, that is a taxable event right now. It may not be forever, and supposedly it doesn't happen with US based cryptos. Again, September 23rd, 2025, disclaimer, okay? Um, Fees. When you are using a brokerage account, you have to deal with the management fees associated with. Some of them charge a percentage of your returns. Some of them charge a flat 1% of your purchase. It depends on whatever that brokerage fee charges. That's the fee that you'll pay to get access to that ETF. It's not free. For cryptos, it's usually just the network fee or the transaction fee for whatever platform you're using. With ETFs, they are regulated by the SEC, the Security and Exchange Commission. So that may give people a sense of comfort like, okay, I know there's some regulation around this particular asset. I'm going to go over here and feel comfortable with it being your crypto that you're buying directly, not a part of an ETF. It varies based on the platform that you're using. Again, a DeFi platform, pretty much no holds bar. It's your asset. You do what you want with it. With a centralized platform, there's going to be a little bit more government oversight. And guys, in other countries, they are cracking down very hard on collecting the tax revenue. There are billions of outstanding dollars that governments are seeing that they can go and collect and fund whatever they want just in this one area. And again, crypto wasn't designed to be taxed, but it's just one area that they can use to fund governments. And so they're really looking at ways to crack down on these centralized platforms to be able to extract their pot of gold, if you will. All right. So when to consider a ETF? If you want crypto exposure in your 401k or your IRA, if you're not comfortable using wallets yet, all of you are pros now, so that you could scratch that off. But for someone that you're talking to, a friend or a colleague or a family member that wants to get into crypto, but they're just not really comfortable with using a wallet, they haven't come to the Blockchain Queens Bitcoin Basic class yet. Um, if they prefer a regulated environment, if they want to invest via their brokerage account, let's say, hey, I have to have this 401k through my job, or I'm going to have it, and they're going to do some matching contributions, I might as well put in there something that I know is going to gain value over time. And I'm going to put the majority of my portfolio in crypto. You now have that ability instead of just traditional markets that we know a lot of them are going away because of the advancement in technology through AI, through automation. Some of the companies that we knew would be around forever, either they need to get on board or they're going to be out of the way very soon. Like, who would have ever thought that we wouldn't be ordering a movie from Blockbusters this Friday? It wasn't even a thought or a part of our reality, but times change, technology changed, and it happened so fast. When I knew when Netflix first came out, I was like, nobody's going to do that. I wasn't a believer. We are streamed out over here. We got every streaming service you can imagine. So it happened, and it happened very quickly. The same thing will be happening with AI and different technologies that are going to change the various companies that we use right now. That is also going to impact your portfolio, your 401k. Okay. And all of us are grown on this call. So we are like looking at using that 401k to live off of retirement and different things. So it's very important that we're analyzing what's in there, not just saying, oh, it's there, it's okay. No, you really got to go back and say, hey, let's have a meeting. I need to see what's in here right now, how it's performing, and then look at those companies to see, are they going to be around in the next 10 years to help me continue to live off of the profits? So again, that would be through your brokerage account like Fidelity or TD Ameritrade. And when you should buy crypto directly. Let's say you want full control over your assets. Um, that's definitely when you want to have your crypto. If you are planning, let's say we're looking at this 4-year cycle that I keep talking about, you have your plan in place. You say, okay, in 4 years, I want to be able to pay for this grandchild's tuition or daycare. I want to be able to pay for this child's college. I want to be able to buy a house in cash. If you're looking to use that 4-year cycle for crypto, and you have it in an ETF, you may not have the same access to it as if you had it and you own it yourself. You can just take that crypto and immediately use it without implications. You know, whenever you take that money out your 401k, they got the fee and they got the fee and the tax, right? But if it's your own crypto asset in a DeFi platform, you just go ahead and use your crypto and your profits whenever you want to. Okay. So if you plan to send your crypto back and forth to people, if you plan to stake it with a reputable platform, if you plan to spend your crypto, that is when you want to buy it directly. If you are a huge believer in decentralization, guys, this mess that's going on here over in these states, these united ones, is enough to make you believe in decentralization, to say, hey, we need to have autonomy over our bodies, over our minds, over our money. And decentralized money is the ability to do that. All right. And or if you're building generational wealth outside of traditional finance, you don't want to have to worry about estate taxes, taking a portion of what you're planning to leave to your children or your grandchildren. You don't want to have to worry about any infighting, any agency saying, "Oh, we couldn't find the paperwork." You can control all of that when you own your own crypto and you have your own protocols put in place. And so I wanted to also offer you some fund providers. So take a screenshot of this if you are looking to add your ETFs as a part of your portfolio. Again, you can have both. I'm going to make sure that the pictures are out of the way. So take a screenshot. This gives you access to who has different types of ETFs. You have your spot Bitcoin ETFs, your spot Ethereum ETFs or token funds, your crypto funds from major brokerages. And then it has the companies listed, the providers or the funds listed for each one. So whether you're team ETF or your team crypto wallet, you've got to understand what you're holding and why. And again, that's where I come in, that blockchain queen, bringing you some vital information on a Tuesday. So tell your friends to join us on Tuesdays with Tonya. Most of you have referral links. If you have your referral link but don't know where it is, don't know what it is, don't hesitate to text me. I can go and look it up and get it right to you. So you make sure if I get some coins, you get some coins too. So stay powerful, stay educated, and as always, stay ahead of the chain. I have the website listed down there. Someone wants to just share it out directly. Let me go to the chats. I'll see the chats. Got some messages in here. Make sure I don't miss anything. Oh, yeah. Okay, a question. Let me see. Monisha, would we be able to move the money out to somewhere? Out from where, Nisha? Tell me, because I missed when you put that down there. Yes, Kraken is a great DeFi platform. Exodus is a great DeFi platform. Coinbase Wallet is a great DeFi platform, and Trust Wallet. Those are kind of the go-tos. Always buy the dip, absolutely. All right. Okay, I think I got all the questions except for Nisha. Hold on. This thing is really cute now. It gives you access to all of your chats from before. So I think I am way up in it. Okay, you said you don't remember. Yes, and both options are perfectly fine, but again, just wanted everyone to know what have can you have two Coinbase wallets? On the DeFi platform, you can have multiple secret keys that give you access to different wallets. But on the centralized platform, because it does KYC, actually your username, your password, I mean, gives you a username and password based on your ID, your social security number. No, you can only have one centralized platform on Coinbase. But the DeFi side, you can have multiple wallets. Let me make sure. Let me see. Sean said, are asset managers considered to be centralized? Yes, absolutely. Your asset managers are going to be people that work on Wall Street, mostly work on Wall Street, work for a large company. and they are regulated, heavily regulated. So they are centralized out the wazoo. They know all your business and they are going to get in your business. Let me see. Tesla, Uber are partnering to move freight with Tesla trucks. Wow. A question, are all ETFs on centralized platforms? Yes, all ETFs are on regulated platforms, regulated by the SEC. So the government, it has complete oversight over ETFs. Let me see. Make sure I didn't miss anything. How do you know which Coinbase wallet you have? A great question. Okay, let me show you. And I think they tried to make it a little bit clearer now. So they're on the App Store. There's the two wallets. I don't know if it's going to let you see this really well. The one up at the top with the C, with the blue backgrounds, a white C, blue background. That is the Coinbase wallet that is tied to the centralized platform. That's the one where they take your KYC and they got all your business and they're going to report it to the government. The other one, the DeFi platform, is down in the middle. It's a blue box inside of a white box. They changed it up. They both used to have C's and it was very confusing. Now they changed it up. That blue box inside the white box is the DeFi platform. So you can know the difference between the two. These are great questions. Fantastic, guys. Well, as always, it is great seeing all of you and looking forward to sharing more next Tuesday. If you have other topics that you're like, hey, can you talk about this? Can you teach us about this? I am happy to share. Just text me, inbox me, send me what you got, and I will do my research. Trying to see you guys, can't see you. Okay, there you go. I will do my research and make sure I give you a phenomenal training to meet your expectations. And so we'll see you all next Tuesday. Hold on, let me see if I missed one. Okay, no, I got that. We'll see you all next Tuesday. Bye bye.
Good night.